This week in the cryptocurrency market has been a testament to Bitcoin's enduring allure and volatility. Despite geopolitical disruptions and significant market retracements taking place in the lead up to the Bitcoin halving event, the cryptocurrency landscape still remains vibrant and ever evolving. Let's dive into the latest trends in the crypto market with GoMining. This past week, Bitcoin's ride was a roller coaster, with its value swinging from $60,000 to $71,120. Just another episode of volatility in the world of digital currency, where global economic twists and market sentiment play huge roles. A number of factors contributed to the drop in the Bitcoin value. As soon as news broke about the increased tensions between Iran and Israel, fear of risk mixed with all of the unpredictability weighed prices down. There have been indications that investors were stepping back from Bitcoin to find investments that feel a bit more like solid ground. According to some experts, the prices were swift to react to recent geopolitical tensions between Iran and Israel, driven by uncertainty and risk aversion across the board. This has impacted cryptocurrencies, including Bitcoin, as investors navigate the heightened volatility and seek safer investment havens. However, in line with historical patterns observed before Bitcoin's halving events, the market typically experiences a retracement. This period reflects the market's bracing for minor rewards to shrink, which means supply would tighten and prices rise in the near future. We can think of this downturn as a healthy correction or the market taking a quick breather before gaining ground again. Echoing this view, analysts from Bitfinex noticed a similar trend in the 2020 pattern, which is characterized by a significant reduction in inactive Bitcoin supply. This movement, not seen for over a year, often precedes a sharp price increase and indicates active trading or off-exchange movements by long-term holders. According to the report, long-term holders, or LTHs, who have owned their Bitcoins for more than 155 days started to actively sell off their coins at a rate of about 16,800 Bitcoin daily. Based on previous cycles, we can expect this trend to last about 7 months, and the peak for this cycle may be about 6 months away. The important thing to keep in mind is that this cycle is unlike any other, with prices being more compressed, up faster than previously, with Bitcoin reaching an all-time high prior to the halving. Among other potential reasons behind this week's drawdown could be liquidations or futures positions. Recent data from CoinGlass highlights that over $93.40 million in long Bitcoin futures were liquidated in a single day. Such liquidation movements play a huge role in making Bitcoin's prices swing sharply and sometimes plummet. Meanwhile, the landscape of Bitcoin ETFs have shown mixed signals. According to Farsight, investors' data, the past week saw divergent trends across several funds. BlackRock's iShares Bitcoin ETF, IBIT, led with substantial inflows totaling approximately $402.4 million. In contrast, the Fidelity Wise Origin Bitcoin Fund, or FBTC, reported modest inflows of $6 million. And Bitwise's BITB saw $11.1 million. Meanwhile, ARK Invest, ARKB, experienced an outflow of $12.9 million, indicating some investor retreat. Following up on the topic of crypto ETFs, a significant regulatory shift. Hong Kong regulators approved the launch of spot Bitcoin and Ether exchange traded funds, or ETFs, on Monday. The introduction of these ETFs in Hong Kong is particularly noteworthy, as it includes not only Bitcoin but also Ether, setting a precedent as one of the first jurisdictions globally to sanction an Ether ETF. Meanwhile, the US Senate has updated its bill on stablecoins, aiming to impose stricter regulations specifically for algorithmic versions. The luminous Gillibrand Payment Stablecoin Act requires that all stablecoins be backed by the same amount of cash or something just as valuable, and it forbids stablecoins that don't have this backing. It covers both federal and state levels of oversight, keeping the US banking system structure intact, and includes steps to protect consumers. For example, if a stablecoin company goes bankrupt, there are specific rules on how to handle it under this bill. During an interview with Tucker Carlson, Pavel Durov, the founder of Telegram Messenger, voiced his concerns about the growing eyes of government surveillance infringing on our privacy rights. In response to these growing intrusions, he's predicting we'll soon see the rise of secure communication devices that work like cryptocurrency wallets, all to keep our chats private and out of the government surveillance. So that's all we have for this one. Make sure to like the video and subscribe for more content just like this. I'll see you guys next time.